Been a long time. NYSE advance minus declines ADD. I changed a little bit, having fun with it. I still using the weekly 26 week moving average, about 6 months of moving average. I found that it wasn't too fast, kind of close to the 200-day moving average on the daily that Stan used. I could even pop that up, see the little differences. But the main goal is to see advanced declines. The logic was, as stocks, you wanted a high breadth of stocks advancing minus declines. And when you saw the price action of the market go up substantially, but the advanced declines weren't making, let's say you were doing new highs right here. Here was a big sign of it. Stock market making new highs, but the advanced decline, the moving average, that Stan called the momentum index, was actually going lower right here, not making higher highs. So how to explain that? The price action is going up, but you have less and less stocks making advancing. Well, it's it's risk off type of a scenario where it's the people are taking off, they're seeing the risk, they're taking money off of the smaller stocks, the more riskier stocks, and putting them into blue chips. That was Stan's reasoning behind it. I don't know if it still holds true today. Is it that it's just the bigger companies that are doing buybacks, which are driving the price up of the stock market, and not just investors, and the smaller companies, maybe they can't do as many buybacks. Hence, they're not advancing as they should be compared to the big stocks. I don't know anymore. So you have to take our old adages or analogies or whatever we used to say, and we repeat because we heard somebody say them. Well, sometimes it's good to take a step back and think for yourself. And try to find out why it's the price action is doing this stuff. But we do know that bearish divergence, does exert some pressure, combining the total weight of evidence with monthly defined breakdowns, with the crossing of 12-month moving average, and the whole wealth of weight of evidence that you have, the arsenal you have. So this was a big warning sign back then. You weren't able, and when you're starting to roll over, and you're already seeing here that you're having difficulty. Stan had the momentum index when it crossed over into negative territory, when you had was a very bearish sign, and the higher and the longer you were in above territory, the stronger the move was on the downside. And here we saw lots of now we're negative territory. So the average, the 26 moving average, really negative, more stocks declining than advancing on the 26 on the moving average. So that's a lot of downwards pressure. So this, what I'm looking at now, I'm trying to see this move right here, very, very strong. If I take just this point or this point here, let's be, whoa, zoom. There you go, perfect. Right here, we're already above those highs. Just have to wait for that to roll over eventually. Higher highs. Next stop, all-time highs. But what's happening? Why isn't the advanced decline still even starting to turn over right here? Even if the price action is etching up and up, the momentum index, the 26 week moving average, is still declining. So for me, that's another clue of the health of the. Could have fun putting doing trend lines. Is there another one here? So it's still declining. So we're starting to create some bearish divergence with this rally right here going up and up. You would want to see the momentum index really driving up higher, starting to challenge these previous highs. but it's not quite able to do so. A lot of downwards pressure still there. And this is just another of the elements or the cues are piling on. So other than the price action, which ultimately is kind of weird, is what ultimately counts. A lot of the technicals around it are they're just waiting for a pullback back down to retest those previous lows. Let's move back just a little bit. I want to try let's go Stan Weinstein style, old school, the 200-day. So here we have the Stan, the 200-day moving average. Remove all trend lines. Okay, I'm going to put the 0 line. Oh, can't get it right. Just pop in the coordinates. Trading view, sweet. So right here we have a cross in negative territory, not good. Again, going downwards. Do we have any? So here's a price action on the daily. Right here, higher highs. Oh, and we're getting a little bit more. It's looking a little bit better on the daily, on the 200-day moving average momentum index of advanced declines. It is looking better right there than the 26-week. Hitting that trend line, hitting previous support, turn resistance. Okay, try to make it fit, but not quite. And turning back downwards. What else? So really close. It really bounced back down from here. What you want to see next step, this is really an important zone right here on the 200-day moving average of the advanced minus declines. For the bull case, you want the price action to keep going up, close above this super duper important congestion zone. Right above here. Hold on, I'm gonna put candles. The line graph removes some of the or it hides the noise within the wicks. Remember, the wicks of the candles is noise from the smaller time frames. So right now on the daily, you want that price action to go close above, and you really want a thrust of that 200-day moving average. You really want to really have a sustained bull run. You want to really see that go back, that 200-day. You want advance. You want people to put money in all sorts of stocks in the New York Stock Exchange. You want them to be risk on. You want that money to flow, and even if they're riskier stocks. So this trend line here bounced back down, not quite making it above this resistance turn support. And then you have the price action that has to close above this super duper important line right here, that 28.18, 28.16. You want a candle close above that. So advanced decline, how has this been used in the past? Same thing here. Keep experimenting. Look at that trend line. That's a 2015 price action, kept going up, but the advanced decline kept going down, and everything stopped when after that the price action closed above that trend line. Tried to go back above, didn't make it. Down after that when it got above that diagonal trend line, that's fine. After that it tested, got above this support and resistance, and off it went, and off we went to where we are today, guys. Let's pull it a little bit back. let's go look at 2008. Same thing here. So it's pretty cool, the Stan Weinstein, the 200-day. I should play with it a little bit more. And what about that downwards advanced decline? Down, 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 down. Oh, close above. A little flaky right here. Support and resistance test. Couldn't quite make it. Try it again. Down. And when you got out, look at that. You were out of the vertical line. When you were out of here, when that momentum was behind you, you also had the price action that you had passed by the lows and never come back. At the end of an economic cycle of a downturn, unemployment was super high right here. Non-farm payrolls low, industrial production low. All those indexes were low. So add all that to your weight of evidence. So it's pretty sweet here to get out. Right here again, that 2015-16 to get out of that base. And right here, that's what you want to see. If this is really the bottom and we're going to continue for another leg up, strong leg up, if I break above this, you got the momentum. The bull case has got momentum for another run high. To form a bigger pattern, bigger top pattern, we'll have to keep an eye on it. Let some time move by until the economic data really starts rolling over. And then after that, when it starts rolling over, I'll have to look at how that top pattern looks and see where the important break lines are and how I could enter my position short and start scaling in for that stage 4, that resumption of that stage 4 decline. So until then, keep an eye on bull technicals, on bearish technicals, and see which ones flag on and off. And that's it, guys. Use all the tools and observe. All right. Thanks for watching. Ciao.